A warm welcome to the Risk Reversal Podcast. I'm Guy Adami, always joined by Dan Nathan. Special today.
We're in Austin.
We're in Austin, Texas.
The Ascend Innovation Summit.
Which is very cool. We've been here. I got here late Wednesday night. You got here early Wednesday.
I did.
As we're doing this, it's Thursday. The conference is in full bore. People are very excited.
Some of the biggest fintech financial services names in the business, and they are all customers of Apex.
Today, we're joined by Matt Hulsizer and his wife, Jenny Just of Peak 6. By the way, after this, we're going to speak with Bill Capuzzi of Apex, which was a fascinating conversation. So stick around for that.
Stick around. All right. So thank you guys for having us. It's really an honor to be here. And we've been walking the halls and we've been talking to a lot of your customers. But it's really interesting. I think our listener, our viewer, is going to be fascinated with how you guys started in the business. And we'll get to Peak 6, but you guys traded, and you traded options, and you did it for a long time in a way that people do not trade options anymore. So I was thinking, Jenny, you want to kind of start us off here? Like, how'd you get in the business? And
well, before you even ask her that, so I was on Fast Money on Wednesday night.
Yeah.
Karen said, you're all suited and knotted up. You have a bag. Where are you going? I said, I'm going to Austin, Texas. As a matter of fact, have you ever heard of Jenny Just? And she's like, oh my God, she's a legend. So Karen Feinerman was fangirling last night, knowing that we were coming down to speak. You too, Matt, but more Karen.
Of course.
And back to Karen. Yeah, I've been watching her for a very long time. So
no, Karen's great. And we'll talk about the democratization for women in the industry as well, because I think that's really important, something you're passionate about.
Yeah,
but to Dan's question about options and sort of how you all got started.
I got my start on the Chicago Board Options Exchange trading floor, and Matt started on the Amex, both at the same firm, O'Connor and Associates. Mm-hmm. So legends, jackets in the Smithsonian Museum, they are the reason we are sitting here today.
So let's talk about that. And I want people outside of our world, they don't realize O'Connor was unbelievable. There was a period of time where they were everything. It was sort of spoken with like in hushed tones if you worked at O'Connor. So speak to that.
Yeah, it was, there was one article I think ever written on O'Connor. And, they were Susquehanna's big competitor. Yeah. Citadel wasn't a name. At that point, it was just starting to become a name. And to this day, right, like the street's been littered with ex-O'Connor people. So we were super fortunate. Yeah, this one article that they wrote about was so it was early days of using tech really aggressively, and they shredded their computer boxes because they didn't want to let people know what the next piece of hardware that they were using. In fact, I remember, so it was, I don't know what year it was, so whenever Steve Jobs left Apple for that little hiatus and he did Next computers, he was in our office.
Is that right?
Because we were testing out the Next computer.
We were their customer.
Yeah.
They're one customer.
By the way, so there were like $10,000 boxes or something
that's
like that
right.
Relative, and that's why they never really got off the ground.
They never got off the ground. But
did you meet Steve Jobs?
I did not meet him. Okay. No, I wish I had, obviously. But, he was even infamous then, and I was a young kid right out of school. So O'Connor, we used to call it O'Connor University because so many people would leave. And at the time, it was a lot of small trading firms would pop up. Today, you don't really see that so much. But they were all ex-O'Connor people. So it wasn't even crazy when we left the firm eventually, because that's kind of what people did. Mm-hmm. Like today we look like, great entrepreneurs. At the time it was like, we're just, spinning off like another ex-O'Connor person.
No, it's an amazing shop. So you met there, you were on the American Stock Exchange, which is a little bit of a different vibe than where you were in Chicago. So speak to that.
Yeah, I mean, it was basically like a big frat party. Most of the time, we had specialists. It was
SIBO was a big frat party too.
I guess they were both
smoking cigarettes on the floor. Was that still going on?
No, we smoked outside. Okay, I didn't smoke, but that did go on. And there were specialists you would stand behind, and so I wanted to be a pro athlete. I wasn't good enough, and the next.
What was your sport of choice?
Ice hockey.
Is that right?
Oh yeah.
Do you still play?
I try. Yes,
he does.
I do.
Yes.
So maybe it could still happen. I don't know. Probably not. So if you can't do that, by the way, you would go down to the floor, and it was like the bell would ring. You were standing next to your competitors, but you had to cooperate, And, it was exciting. You had, at the end of the day, you had a score.
That's right.
So it was great.
This is really important. I think a lot of folks, and we're going to talk about retail, but a lot of our listeners here, they just hit a button and they buy or sell an option, right? And, for the most part, obviously equities, we always had the NASDAQ, and then you had the open outcry. And I think a lot of folks got very familiar with what that looked like. But talk about open outcry for options and pits, and it wasn't set up the same way obviously equity trading was. The spreads were really wide. You had market makers in there who were doing some fun stuff. I'm sure that was what you guys did. Just talk really quickly about that, just to kind of go down memory lane and just kind of, I think it'll highlight a little bit of all the friction that's been taken out.
I mean, first of all, things were quoted in eighths and quarters. Okay. And you would yell. So a broker would come into the crowd. How are the Jan 50s? Right. Okay. IBM Jan 50s. How are they? And you would yell 1 1/8, 3/8, 25 cent wide. And he goes, I'd sell 500, 1 1/8, go buy them. And then he would pretty much arbitrarily allocate, because if you were tall or loud or good looking, he liked you. He'd go, okay, you did 50, 50, 50, 50, 50. And you would write on a card. On a card, you'd write down, I have my badge, OCA 677 with a G. I still remember. Yell, hey, that's me. And he would write my badge, and I'd write his badge down. And we'd write this on this piece of paper. As the papers gathered, you'd take the papers over, you'd stick them into effectively a vacuum tube. It would get sent up.
You sound really fucking old.
It's amazing, isn't it? But it worked.
It did. It did. There was this old job, which no one of your listeners are going to likely know. It's called data entry.
Yeah.
Where they would just type what you wrote. It was crazy. And then we get into systems, and that was how it worked.
But there were definitely, this is back in 1997. I spent a day on the Merc, and the guy that I worked for as an assistant, he thought it was a great idea to sit there and trade proprietary. And, you had the pit, you had the guys around the pit, and then there was a lot of that stuff. And they would fling the cards. I don't know if they did that back then. And somebody would catch it up there.
Well, the guys in the middle, they would wear goggles because assholes like me would try to hit them in the face with the cards. Anyway, please.
Because you get bored. What else are you doing?
But so Jenny, what did you do? Because at the end of the day, there were breaks. Like, there were not agreements on certain prices. And I saw two guys, this was like at 3:20. This is Central Time. You know what I mean? Like, literally going at it, and someone had to break them up. Was that a thing back then for you?
Oh, yeah. There was definitely. Well, so my first day, Drexel Burnham declared bankruptcy. So they sat me on the stoop.
So you were February 90, right? Is that right?
So that's why I thought it was earlier. And then, so they sat me on the stoop and didn't come back for me. The second day, one of the more senior traders at O'Connor came up to me and said, don't worry, I'll protect you. And I was like, from what?
From what?
What's, and I would say I grew up with 4 brothers. So they're just idiots. Like, if there's a fight, I'll just get in the middle because they're just being dumb, So, but I think the worst was like the drinking a gallon of milk and seeing who can hold it down the longest. Like, it's like the downtime was the worst, but the uptime was the best. I would say of all of our years of career, still ranks up in top 5.
You mentioned, by the way, those outs and disputes. What I will tell you, and you both know, and Dan knows as well, if you were a person that bought something at 10 and at the end of the day it closed at 7, and you said, I don't remember buying that from you, Jenny would be like, you know what? Okay, that's fine. We'll DK that. But for the rest of his career, if it lasts that long, nobody's going to trade with it. So it was a self-policing system. So you could play that game if you wanted, but you weren't going to last long. So speak to that, sort of how the system did work.
Yeah, look, you didn't know. Your word was your bond.
That's right.
And, like I was saying, you would write down the person's badge. And at the end of the day, like, hey, I thought you said I only sold you 10. I didn't sell you 50. And you would have to meet up at the next morning in the DK room and decide, is this really what happened? And so your reputation was everything on the floor, or no one would trade with you.
That's right.
Going through that process, by the way, which we'll talk about later, is really a lot of the genetics around what happened with Apex, because Jenny and I lived it. We understood at the masonry level what it meant, how the financial system works in terms of matching up and making sure you show up with the money or the other side of the trade.
O'Connor was also a self-clearing firm. So we literally worked in those back office night outs to get extra money. And so we learned every piece of the puzzle. And in fact, Apex wouldn't have existed the way it does today if we hadn't done that, because we wouldn't have known what the business was.
So Matt talked about wanting to be a professional athlete, maybe not having the skill of a Brian Bellows to do it. However, you found that competition in the form of what you went on to do. What was driving you? Like, what was your love of the markets? Where did that come from, do you think?
I didn't have a love for the markets. I grew up with a dad who was a doctor and a mom who was a teacher. I had a brother who loved the market, sort of like how Matt did when he was, young teen. But I was good at math and I answered questions quickly. So and O'Connor was progressive in that way, right? So I was definitely a token female, but I was capable and I learned to love it. And what I always say, especially for females today, it's like, this is the reality show you should be watching. This is where all the interesting stuff that is changing your pocketbook and the economy and what's going on in the world. The equity markets are the shows to be watching. That's what makes it so interesting and so enticing and so engaging. And you can make money doing it.
What's
amen.
better than that?
That's right.
All right, so I just noticed you have a wedding ring on. You have a wedding ring on, an engagement ring. At some point, you guys got together. You were on the MX. You were on the SIBO. How did this happen?
So it was a long time. We knew each other 10 years before we were married. So we were at O'Connor, both on the trading side. We both got asked to start the over-the-counter derivatives when they did a joint venture with Swiss Bank. So it was just the two of us in our 20s and a gentleman they hired from Goldman Sachs. So we started this department together. We started calling on clients, people like Dell and Microsoft and General Motors and Wendy's and American Express Financial Advisors. And so we started to build a business. That business quickly trounced this listed business that was O'Connor's business forever. And obviously it was big enough for the Swiss Bank, UBS, all of it to be merged together eventually. And so we were building a business together. The business was moving to the East Coast. UBS was getting its headquarters out there in Sanford, and we didn't want to move. I was in Chicago. I grew up in Wisconsin. I wanted to be there. He had moved from out east to Chicago for the job. So we're like, well, we just did that. We're super naive. Matt always says, he went out and, he said, we're going to do this same thing again, and went to the then vice chair, I think, vice chair.
Yeah, it would be, I'm revealing here something like it's mythology to think we were some visionary entrepreneurs. We weren't. We wanted to stay at the bank. We were over promoted, and they kept telling us hey, we want you to sell more stuff. We'd be sitting next to Greg Maffei, who was then the CFO of Microsoft. He wants to learn about derivatives and what we're doing in our tech. And the bank was trying to be all things to all people at the time. They wanted to do your credit card and your mortgage and your checking. It's I don't really know how to do that.
Right.
And I kind of don't care about that. But they would tell me, when you're talking to him, pitch this. It's okay. So we went to the vice chairman. We said, look, we think we have something special here in terms of education and technology around risk and derivatives. And he said, yeah, the bank's not going that way.
Right.
You're wrong. So we started Peak 6 because we were basically told we were just wrong.
You were going to be obsolete.
Yeah.
Meanwhile, fast forward to today. Think about the things you were talking about then and the importance of options and derivatives in today's world. So you were you could talk about being over promoted, but you were way ahead of the game back then. Speak to that.
Yeah, I think we were way ahead in terms of tech in particular. And that was actually O'Connor's influence, just in a different way. So they were so busy building technology, but it was on the other side of the elevator bank behind the scenes. And we all wanted it every day at our desktop, and it took forever to get there. So we said, well, we're just going to do this differently. So when we left, we actually wanted to start an over-the-counter business. That was our plan A. We needed a bank, someone who had a credit. So we went and looked for a bank. Simultaneously, we did plan B. We've still never done plan A. And I should say we might be on our way at this point.
We're just executing slowly.
We're just executing slowly. But plan B, we started trading and very early
Proprietary trading.
Proprietary trading.
Will you just explain OTC for our listener a little bit? Because that must have been very new back then, I'm assuming.
Yeah, it was very new, which is crazy, right? Matt has a pretty funny story about, as we're sitting here in Austin, about Michael Dell calling at the time when we were in our 20s. Non-exchange traded. It's a much bigger market. It's happening with the financial institutions. It's happening with corporations. Think about Microsoft. They don't just buy shares as part of their share buyback. They might sell puts along with buying back those shares. But how many puts are they going to sell? Millions at a time. And that kind of volume wasn't happening on those exchange floors. And remember, those exchange floors at the time were like 4 to 5 of them, maybe 6, started coming into play. But so all of those really big trades, the interesting thing I think for us, and part of the reason why, we're here 28 years later, we've never had a losing year in our options trading business, is because we had perspective on how big the market was, besides what was right in front of us on those trading floors.
All right, but this is something that Guy and I have struggled with, because a lot of folks come on CNBC and they talk about unusual activity, and they're saying, so OTC, it doesn't change but all the market makers, they're doing other things against it, right? And so the idea that someone could actually say the smart money's doing this, look at all the accumulation of calls across this, and we'd always you have no idea what that's against. And if you were on an institutional desk, you know that, right? And so that's one of the things that it was always frustrating to me. I worked on a derivatives desk at Merrill for a couple of years, and I was a long short equity person. And then all of a sudden it just opened this whole window to what's going on in and around, the options thing. And so I find it fascinating that it was massive and no one knew what was going on. And then a lot of the activity was actually to hedge out a lot of that sort of risk. So when did this become, is OTC still that sort of market? Should folks who are out there trading options, should they be thinking it in a similar way, that what you see print is not exactly the thing that you see trading?
Yeah, I mean, just look at the bank earnings. If you look at the balance sheets of JP Morgan, Goldman Sachs, Morgan Stanley, and see where they make their money, particularly on fixed income, commodities, credit, and equities trading, that is not from listed trading. 85% of that is coming from over-the-counter trades that they are doing with their corporate or institutional customers. And then the listed stuff is a proxy, but not an exact offset usually, for their for the risk that they took on by facilitating their customer.
So you're talking about risk. So Jenny, this is for you. I was at Goldman Sachs. I was at J. Aron. There was a gentleman named Peter Gerhardt, and I'm not doxing him. He's a friend of mine. I don't know if you know Peter or not, but he ran foreign exchange at J. Aron. The year before he made partner, he'd lost about $150 million, which is a staggering number. But he was made partner the following year. And I think the thought process was, if somebody can lose that amount of money, their mindset and they're wired in a way that probably can make 4 or 5 times as much. And it speaks to a chip or a characteristic that most people don't have. You both obviously have it. When did you learn that you had that risk-taking chip?
Just by background, for 24 years of Peak 6, we were not public at all. And we're still a private company, but I started talking about risk, particularly trying to get women to take more risk, especially around money. I learned it. So it is a skill that you can learn. I would say I was, people look at us as risk takers. I would say we didn't take enough risk early on because I wasn't really a risk taker. So we had Matt and I and our first couple of employees, and we each had a different appetite. We were really fortunate to have those people to bounce those things off of, to slowly and methodically get through each of those, because there's always downs. The question is how many and how big. And so O'Connor, right, was critical in that repetition every day, all day, right? So you get used to it. You start with small hands and you build up to bigger and bigger hands. And the question is how big can that hand be? And today, obviously, our hands are much bigger than in the past. But that's only because we've gone through that process. Now, I do talk about this, particularly for females. If I had played poker sooner, I would have done that differently. I think our losses would have been different. I think options already have leverage, but I think I would have taken more risk along the way. But again, when we say we had 28 years, never a losing year, that's not necessarily the best thing, because that means maybe we didn't take enough risk. But we are here. Right? So we always say we don't have the highest highs, but we haven't had the lowest lows, and we've been super consistent doing it.
All right, let's talk a little bit about what made up those flows. I started doing an options show on CNBC in April of 2009, and it was really interesting. It was sponsored by then at the time Thinkorswim. Do you remember that? And it was and they were like, listen, let's get this product out to the people, right? And so it's really fascinating in a way. And the viewership just kept on growing and growing. And, these guys, and then it became TD, right? They ended up sponsoring the show for 15 years. Just think about that, writing a check, so folks could kind of see this. And I think options volumes over that period of time, I don't know, what percent it started out as retail over the course of your careers, but it's a big one now. If you look at some of the companies that are here and you look at their quarterly results, I mean, options could be a third of their revenues. So talk to us a little bit about like how the evolution of that has come, because those flows have been very important to Peak Six.
Yeah, and it's people like Tom and the people that are at the conference here today, right? And your listeners, everyone kind of wants the same thing. Everybody wants freedom, right? I can buy a stock. This gives me exposure to, Google. I like Google. Okay, well, options gives you color around that. Like Google stock is $230 hypothetically. I say, well, I think it's going to go to $260, which is different than me saying it's going to $600. Options gives you flexibility. And you may do a lot of work and say, great, I'm going to read up about it and say, you know what? Google's actually not going anywhere. Options allow you to express your opinion regardless, right? Historically, it just used to be, hey, you could buy the stock, you could maybe short the stock if you wanted to take the risk. That was it. Options really let you say, nope, I think this is what's going to happen, or this is how it fits me best. I own stock and I would sell it if it goes above $270, but I may not want to pay taxes this year. So I would do that by selling options out past the end of the year. I want to get capital gains. There's lots of options give users flexibility and freedom. And that is the real democratization of the market.
Well, you spoke about 3 decades effectively of extraordinary, just that track record speaks for itself. But there used to be a saying at Goldman Sachs, consistency is a moving target. So what worked 10 years ago is not working today. What worked 10 days ago might not be working today. So what have you noticed over the years, like the biggest changes? I know that's sort of a broad question, but a lot has changed.
So what we do with our team is, well, it used to be 3-year increments. Now, we need to evolve our tech because there's another Matt and Jenny sitting somewhere doing that same thing. Obviously, that's changed because just the weight of the technology that you need to have, the cost, the infrastructure is bigger today than it was when we started. But there's going to be someone back coming through the door who's taken your dimes and your nickels. So that's what, even if there's no change necessary, I mean, let me tell you, what's really hard to do is traders who are making money, get them to change, right? Because they have no interest. So we are forcing through the system ideas and themes and goals for the sake of doing it, knowing that those bad days are coming in, right? Obviously, volume's down 18 or whatever year you want to pick. That's tough for us. Volatility's low, volume's low. What are we going to do? So reinvest at the best times for sure. Like this year, what I say to our guys, like, it's an amazing year. I think as long as Trump's in this administration, it's going to be an opportunistic time.
Volatile.
Yes.
When you love all these Mag 7, they're all like average price $500. Don't you want them all split 10 for 1? Just from a volume standpoint a little bit, or no?
I mean, it's really about notional, I would say, and the volatility around it. If you get more people involved in the market, we tend to do better. We're a lot like a retail store. The more customers you have, the better. And the more, the more you can turn your inventory over.
Well, talk about that, like how your customer base or how you've seen the retail. And we started talking about it a little bit over the last 15 years. It's just amazing. I thought the product, or I've seen how it's been aspirational, right? So if you come into the market, you know how to buy or sell a stock, right? And there's time horizons, there's risk, all that sort of stuff. But then you see, well, what's the next thing? Well, you could sell a call against your long stock, and then, that's kind of like the gateway drug to options trading. And then the idea of, if I can sell a call, then I could use the proceeds, I can buy a put, and I can collar the stock, and then maybe I'll pay taxes next year. I mean, there's like a lot of stuff. And the more like retail hears about this or learns about it, they want to do more, right? And so like, how is that retail flow? Do you think, is it accurate? Are they growing smarter and smarter, and they're using these tools better and better? Or no, you guys are just there to take advantage of no matter what. If they're good at it or bad at it, you don't really care.
Look, I think what's the big thing in the industry is that the duration.
For those listening and not watching, we both looked at each other all the time.
Yeah.
The duration has shortened. What that means is it's become closer to, so investing tends to take place over a longer period of time, and betting tends to take place over a shorter period of time. And the market has gotten a lot shorter, mostly because it's become accessible, and the longer term stuff hasn't really innovated nearly as well. And so zero day to expiration options have flourished. People say, hey, I think it's going to go higher today. You get immediate gratification. And that has really driven a lot of the growth in the market. Would we prefer it was people hedging or thinking more about investing? Sure. But the infrastructure hasn't grown in lockstep with the investors. And so I'll just give you a very specific example. One of our kids buys 65 shares of NVIDIA at $40. The stock trades 200. He's like, gosh, it's had really a good run. I want to protect. I should go buy a put. Well, right, he can't because a put's on 100 shares and he only owns 65.
Can I adopt him? I want to like that. I mean, my girls are great, but they didn't say, Dad, I'm buying NVIDIA at $40.
Exactly.
But that speaks to, which when I started in 1986 at Drexel Barnum, the aforementioned, there was a word that gets thrown around, instinct. I'm going to ask each of you, does it matter? Is it important? I think it was important 40 years ago. I'm not so sure in today's world it matters at all. Speak to the importance or the use of that word, Jenny. Do you think, go ahead, Matt, if you want to jump in.
I think instinct, we've operated, we've had thousands of traders trade for Peak 6. Okay, 28 years, we've seen a lot. I think people either have it or don't. I think it's hard to teach instinct. The best thing I can tell you about instinct is, if you have it, is self-awareness. Okay, and I use Michael Jordan. We're from Chicago. We've been in Chicago, and Michael is an amazing basketball player. He was a really, really good baseball player, but not in the top 600. And so he played in the minors. Being good at one thing does not mean you are good at everything. And so instinct, knowing what you're good at is critical for traders. And for your listeners, if I was a retail trader, I want to know, what is it that I'm good at? Right? Just because you understand short-term moves in NVIDIA does not mean you will be great at trading Kraft Heinz or Procter & Gamble or biotech. And that is the skill that we've learned over 28 years about traders, is just teaching self-awareness.
Hey, Jenny, so on that instinct front, I mean, you've talked about the evolution of technology and how you guys leaned into that when you left O'Connor because they weren't giving it to you. And you're like, we're going to build our own. Has technology and the evolution of it taken some of that instinct out from a risk-taking perspective? Because, you guys were sitting down there, you had to price risk in your brain. You had to price options, and then you had to think about what you own against it or short against it, that sort of thing. And now it's almost instantaneous, right? You just put in a trade and it'll tell you that sort of thing. And is that by design also?
I think there's different types of trading. Peak 6 falls a bit of a hybrid still. So we talk about Jane Street, for example, being like DoorDash. We're more like 7-Eleven. We're holding the inventory much longer. And so the longer you do that, the more that each one of those different characteristics sort of come into play. And depending on the strategy, so we have a bunch of different strategies and a bunch of different people, and we put them in the strategy that connects most with how they think and how they feel. Every time you think the tech, it's a little bit like we talked about with the wealth advisors today. Every time you think the tech is overtaking, the person has a creative solution to put on top of it. And so our people are incredibly important. So we teach everybody who comes in, and it's rare. We had a couple people who came in from the outside as traders, but everybody gets taught the basics from us. Our third employee taught our fourth employee. That was our first class. So, and O'Connor was amazing at education. So obviously we followed suit, but every single one of them is getting this baseline foundation. Over the last however many years, the tech has gotten better and better and better, and our traders remain just as critical as they ever have been. So
And you guys have a retail platform, right? What do you think consistently is the mistakes that most people make when they're like, I guess, new to it? And then what are the ones that make the longevity, like, right? So if you think about it, a lot of folks, they love access to it. They're usually not running vol strategies. If you're sitting at home, like it's against some investments, or you're looking for different ways to maybe use leverage or express a view in the market. What are some of the like routine mistakes that you guys look on and you see? And it's just like, it's the sort of thing that takes people out of the options market.
I don't know. To be honest, I don't know that a lot of people leave the options market. I think once you're in it, even if unless you way overextend yourself, you're probably going to still be an options person. I think the one thing I would say, like, if there was a mistake, it's lack of participation, right? We're the custodian. So right, Apex, we've got almost 40 million customers, or at the end of the year, let's call it 40 million customers. And not a lot of them trade options. But if you look at performance, right? Who are those people who are educating themselves? Those people, if you said, who would I want to invest in? I would want to invest in the retail traders that are actually embracing the newer products and trying, because they're learning. They tend to be younger, and they're going to learn, and they're going to figure out, again, self-awareness. They're going to get practice today. And as they scale up their wealth, they'll have a better knowledge of what they're good or not good at. And that is the part I will tell you, is participation is way more critical than expertise.
I mentioned I started in the commodities world. When I started, commodities world was, nobody really knew about it. Now it's an asset class. Yeah. Can you see options as an asset class? Or maybe it is already.
Yeah, I mean, options is an asset class today. And it's just not an asset class for everyone. It should be.
That's
right. This is why it's one of the, as you democratize finance, you actually have to educate people. It's why we come on this show, even though we haven't historically been very public, because it's important. Like, people have to learn how to invest and be responsible for their money.
And let's be clear, people are getting employee stock options.
Yes.
And they don't know. They don't understand them. Right? So how much of your wealth is tied up in something you really don't understand? And so if you had been participating, these things would make a lot more sense.
You just mentioned Steve Jobs before. I just saw a video of him sitting. Have you ever seen this video? He looks like he's under a tent, and he's like, this is when he's still at Apple, and it must have been, I want to say, probably early 90s. And the comment on top of the video was Steve Jobs explaining something like he does, as simple as he always does. He was explaining employee stock options, which was really interesting. And it's interesting also because remember, he got in a little trouble with the SEC about remarking options, that sort of thing. So again, I think a lot of folks like think of them sort of that way. Let's broaden it out a little bit. So Peak Six, you said you've had this amazing success. You've moved into other parts of the options market, but then you've also, let's talk about Apex for a second. We did speak to Bill already, and we got to hear a lot about that business and a lot of your customers and how you guys are driving innovation for them. How does Apex fit into this? And again, you have other business lines that sound really interesting also.
As a trading firm, we're going to do all those things that trading firms typically do. At some point, we took a hard right or a hard left, however you want to look at it, because we did a hedge fund for a little while. We actually ended up selling it. When we started Options House, that was sort of the beginning of this different trajectory for your traditional.
So our retail broker, we started retail broker Options House.
Yeah. So think pre-generation, for those people who are too young, pre-generation Robinhood, Trade King, Trade Monster, Zecco, all of those. So all those middle tier, and we were in the middle of the pack building it. Options Express had come about, and we're like, wait a second, if they can do that, we can do that too. Turns out, though, it's not about options at all. It's about customers and marketing and shit we didn't know about. So we start building this thing, and everything we've done at Peak Six is self-funded. So we've taken trading profits and sort of spun them in and bought and sold things. And so we're building Options House, and our clearing firm is a company called Penson, who is a public company. And I'll let you take it over from here because you're the one that got the call.
Yeah, so I get a call. So your clearing firm custodian, they hold the money, right? They're your bank. And I get a call on a Friday afternoon from the CEO. He's like, hey, you guys are a big customer. You guys have a bunch of money. How would you like to lend us some more money on a short term?
So we happen to own the converts in Penson in the hedge fund, which is how the CEO, know who he was. And
so this would be akin to you guys getting a call from whoever your credit card, your bank calls you up at the end of the day and says, hey, lend us some money. What do you think? That's usually not.
So that is, the warning signs go off.
Monday, the SEC calls, and they said, there's fraud announced. We need $70 million by Friday, or this thing is out. By Friday is Monday. So this is 2012. Who the fuck are we?
Yeah.
Why are you talking? You're calling us for that money? Like, what do you, like, where's the consortium? Where's some other idea?
Consortium.
A lot of financial firms still had a lot of PTSD from the financial crisis,
God.
right? Yeah.
Right.
Yeah.
There's a million customers, and they're going to SIPC liquidate, which means you're basically going to you're going to get cashed out of your positions, and it's just going to be bedlam.
Yeah, millions of customers, because there's all kinds of people were clearing there, right?
Yeah.
So this was Friday night. You get the call. Monday is it's over the
SEC.
weekend. That must have been a shitty weekend. But please continue.
Oh no, the shitty weekend came because on Friday we're like, oh, whatever, something's going on. We don't really know. When the SEC calls, now you know. So that was Monday. 13 days later, we owned that thing.
With announced fraud, just to be clear.
Obviously, no due diligence.
Yeah, that Monday call was rough. $70 million. It was Mike Macchiaroli. I don't know if he listens to your pod or not, but Mike's like, we need the money. That's it. I was like, I need to talk to Jenny.
Right.
Yeah. So it was obviously big. It would be big today. It's a big dollar amount, but we wanted at Options House. We were more than $30 million of our own money into that thing already. So what are we going to do? And we pushed all our chips in, obviously. And we had about 30 people from Chicago descend on Dallas. That's where it was headquartered. And we proceeded over the next 2 years. We got rid of, let's call it 65% of the clients. We wanted to build the technology that Apex had wanted. So mobile account opening. And it was fortuitous. Robinhood, Wealthfront, and Betterment came around, and nobody else had that yet. So
yeah, and so like you think about it holistically, so you have your trading business, it's your proprietary market making, you started Options House, you have retail, now you have this back end engine, right, to power lots of other, fintechs or financial services companies, and then so you got this little empire going here, right? And so then, so you like to put
didn't feel like an empire.
Well, yeah, but
like
now,
chaos,
you were just talking like you put your chips on the table,
right?
All of them, you said, Jenny.
Yeah,
so
there's a lot of them.
What came next? Because I keep hearing you guys are invested here, you're there, like this and that, whatever. How did you moved into private markets a little bit too?
Yeah, we did quite a few things. So at this point, Peak Six is really a company of companies. We've started or bought and turned around, let's call it 15-ish companies. There's 6.5 today. Poker Bar, I didn't mean to start, actually. That was kind of an accident. But what we saw when we started doing Apex, right, all the back-end processing for, these millions of customers and more than 200 B2B clients, was that what we were actually really good at trading was what was making us good there. So one thing we had done early in our trading day, and it was Blair Hull, you remember Blair, Hull Trading, eventually Goldman. He came in and he said to us, what are you guys doing? This is there's probably less than 10, 20 people there at the time when he came in. We had off-the-shelf models. And Matt said, we beat him with our business model.
Right.
We were creating what we called an inventory management system. We actually almost went public at one point. And then they wouldn't let us go out as inventory managers. We modeled our technology off of Walmart and Walgreens. So that same sort of method to that madness, now we're going to do that for customers on the back end.
We ended up, and so if you can apply that to lots of different businesses, which again, look, we have lost money in more ways than anyone you've ever had on this show.
Creatively.
Oh yeah.
Creatively.
We're good at that.
Yeah.
On occasion, some of them work, and we like learning. We're curious people, and so we've ended up in things like pro sports because we like data, not because we want to be the mayor of the town, but because sports looks like markets. It's continuous movement, and it's data and analytics, and if you've got thoughts around that, you can be you can create value. And we ended up in things in and around technology as a result. So yes, the private markets. Because people show up and we're like, oh, we recognize this. It may not be perfect, but it rhymes with something that we understand.
So sometimes we'll operate them. So we've gotten into the insurtech side of the business. We've gotten into some edutech businesses. Those are operating companies for us. But then we started, because as we built things and we would sell them and there was extra cash or trading was going really well, we started making investments. But the interesting investments, I think, in the beginning, of course, were off of Apex, because now we're seeing Robinhood comes through. When they come in, they can't pay us, so they give us stock and warrants. The next one that comes in, we're seeing all of them, who's winning, because we see the data. Who are we going to support? Obviously, Webull is, eToro. Some of the biggest winners have gone public. We were early days in those. And so that started creating these private investments over here. At one point, it's probably 50% of that was fintech. Today, because of AI and its much bigger investments, that, that's a part of it, but not 50% anymore. So AI is really kind of trouncing some of that.
I love Matt Damon. I know this is like where are you going with this? I could watch Rounders on a friggin' loop. I love that movie. And there's the saying, which if within 20 minutes you don't know who the sucker is,
right?
It's you.
Yeah.
your passion for poker, because what we do, that's a poker table in a lot of ways. So it's tailor made for you. Speak to that.
So the funny thing about poker is, are you guys poker players?
A little bit.
Okay. I didn't play. Matt didn't play. But of course, our firm and our trading side is littered with poker players. And I was like, wasted time, boys, and they don't want me there.
Right.
So I ignored it. And Matt came home. So we became husband and wife 6 years after we started Peak Six. So we have 4 kids, and our youngest, so 3 boys and a girl, our youngest is playing tennis match. Very good athlete. Matt was a college athlete, and he's pissed because she's not winning against someone looks like she should be winning against. And he comes home and he's chirping in my ear. She may as well have been hitting against a wall. She doesn't realize she's playing against somebody who's thinking and strategizing. She needs to learn to play poker. And then I walked out of the room, because I thought it was ridiculous. But like 2 weeks later, I was like, should I teach my 14-year-old daughter to play poker? And then I was pissed, because I never would have asked that about my sons. And by the way, it turns out they already knew how to play, because they all just figure it out, right? Like a high percent, let's call it 80+%, figure out how to play when they're very young. And so we did an experiment, 10 girls, and then the moms wanted to join, 10 moms, 8th and 9th grade girls. And the only reason we became public was because of how profound 4 1-hour lessons with these girls was. So it was all about confidence. That's what I saw. But I start to learn. And I'm like, this looks like my work. This looks like that deal I just did.
Right.
This looks like that negotiation. And then we started using it as a framework. And even the guys who didn't play around our leadership team, I'm like, you got to learn. And then our leadership team started playing with their employees and had such a big impact on what they started to understand about the risk-taking mindset of the people that were part of their leadership team. Anyway, it was so profound in the impact that we've now taught, I don't know, the number is over 250,000.
Wow.
In 372 companies or something in 60 countries, trying to reach 1 million girls and women, to
That's amazing.
Play this game.
And I'm fascinated by that. I will tell you, and this is, maybe it's oversimplifying, or women are better traders than men on the margins. And I think in your world, in that other world of yours, in poker, my instinct suggests that women are probably much better poker players as well. Why do you think that is?
Okay, so I will tell you something fascinating in this process of this poker thing and being out there talking about it. Lisa Su, AMD, girl playing poker, CEO, Time CEO of the year.
She's a good bluffer, by the way.
Sonia Sotomayor, poker player. Hillary Clinton, Chelsea Clinton, grew up playing poker with their grandfather. She teaches Chelsea. Like, the names just keep going. The only woman who is Fortune 500 CEO twice, also her sister started playing poker at ages 6 and 7, Maggie Wilderauder. She's retired now. I mean, it keeps, I'm telling you,
no, I know.
65% of them maybe played poker. Do I think they are better than the men? I think what it shows, and maybe you want to jump in about, is it's like driving 100 years ago.
Yeah, I mean, I say this because we have Apex, right? You got 40 million customers. 80% of them are, 82% of them are men. Okay. Women just don't participate. It's not that men are better investors than women. They are not. They just play. That's the difference, just participation. And so I say this because people say, well, why do you do this? Like, we feel like we're Henry Ford in 1925. Women are 7% of the drivers. You guys may think you're better drivers than your girlfriend.
Oh, I know I'm a great driver.
Great.
Well, there's a funny thing. I don't mean to interrupt, but I'll say this. They put out this questionnaire. They say, do you think you'd be able to land a jumbo jet? And like 85% of the men say, of course I could, which is complete horseshit.
Yeah.
Right? It's that mindset.
It is.
But it is exactly like driving. The insurance tables tell you, like, women and men are equal at driving. Investing capital, women and men are going to be equal. Now, we get this all the time. Like, wow, drivers, like, men are all the best drivers. Look at Formula One. It's all men. I was like, yes, the 20 best drivers in the world are all men. They take a lot more risk. The 20 worst drivers in the world are also all men. That's called variance. That's not skill. Okay. The skill is equally distributed. And so getting participation of women in the markets, getting comfortable taking risk, it's just inevitable.
What's interesting, the term participation, I've been married for 25 years. My wife and I have been together for 30 years. I've probably driven, when we are together, 98% of the time. I mean, just think about it. I'm a much better driver than her. I mean, like, all right.
Well, before, just
but
anecdotally, a few years ago, I got a phone call, and Dan said, you need to write me a letter of reference or a character, because he was stopped in Maine doing 90-something miles an hour.
I doubled up.
10 minutes later, you got stopped again. So let's like
I doubled up the speed limit. And it's a felony in Maine. And then I got pulled over 20 minutes later going 50 in a 25.
Oh my gosh.
And I said to the guy, dude, he goes, yeah, I know, they called ahead.
You're in Texas, by the way. Yeah. I will tell you, the one thing they want to do is get rid of speed limits.
Yeah. I got a couple good Texas stories. I lived in Dallas for a while. I had my wife there. All right. Last thing, because I know you guys got to get back up there. We really, really do appreciate your time. When you think about everything that you guys have done, democratizing this and encouraging people to take better risks and giving them access to new products, what are the biggest changes in the next 5 years as you think? And let's just talk about retail investors for the most part, because obviously we have a lot of self-directed investors who listen to the pod.
So, I mean, I'd say like the democratization, that's the risk you run, and I'll pick AI. Like, you want everyone to use it. It is for you. It's the great democratizer. The technology doesn't know who's using it. Anyone can use it. That's what's so great. So if I was a listener, I would try to make sure I am embracing the tech and the massive technology changes that are going on. Okay. A meteor has gone and hit now in the form of AI, and it is going to level the playing field for everyone. If there's no more of this insider stuff, hey, you're not in the white shoe club. That piece for your listeners, that's the best advice I could give you, is that 5 years from now, the world will be a hell of a lot different.
Yeah, I would agree. I think a couple big things that we care about, for me in particular, for women, I think, and Bill mentioned it earlier, stock rewards. So instead of points and miles, we're now getting shares of stock. You're flying Delta Airlines, get shares of stock instead. I mean, think about over the long term, if that had been going on. For our kids who are on wealth creation, you're on Amazon. How many times a day are our teenagers on Amazon in some form or fashion? If they have been getting fractional shares all along the way, we know at $50 is when people care. We also know that within a 4 to 6 month time frame, increase in loyalty is like 40%. And people, this is the other thing. If we get especially our young girls, understanding what it means to participate in the stock market at a young age, right? People are always scared. Oh, what if stock goes down, right? And they thinking about stock rewards for a restaurant. What if my stock goes down? If we get them participating, it's like learning to ski by reading. You got to get on the fucking mountain. Yeah. And so how do we start to do that? In small ways, incrementally, with our kids when they're younger, when they're in touch with the companies that they already love. And then we see it's not a smooth path. It's never, ever just straight up and to the right. We're going to have some bumps. And if you love that restaurant, then you and your friends have to keep going. And if not, you guys have to pull your stock out of that restaurant. But whichever the case is, we have to keep moving forward, not moving back. And the only way we're going to do it is to get people learning. And I think the best way to engage is to buy or sell a share of stock, buy or sell a crypto.
Jenny, Matt, you're both skiing double black diamonds. It's been great to have you both with us. Stick around for our conversation with Bill Capuzzi. Thank you both.
Thank you.
Thanks for having us.
Very special guest. He's actually a host of ours, guy, right down here. We are in Austin, Texas. We are at the Ascend Innovation Summit. That's Bill Capuzzi. He is co-founder, CEO of Apex. Welcome to the podcast.
Yeah, thanks.
You know why else he's special? I mean, it should be clearly and painfully obvious. He's Italian. He's Paisan.
Paisan.
So the Paisans stick together.
Well, by the way, the good half.
Well, I tell people I'm half Sicilian, half Italian.
There we go.
Which I think you understand. And there's also, I say, there are two kinds of people in the world. They're Italians, and they're people that want to be Italian.
That's it. If you know, you know.
If you know, you know. But it's great to have you here.
Yeah.
All right, we're going to spend some time, Guy, talking about financial innovation, fintech, and the like here.
Yeah.
But Bill, we appreciate you having us down
Yeah.
here. A full 2 days of content, a lot of great speakers, a lot of great topics. Guy and I are working with one of your guys, Mike, who we're going to have a market outlook. We're really excited about that. We're going to be doing one of our first standing tables. It's a little live podcast. So we're here for all of it.
Yeah.
Tell the folks what we're doing here, what you're doing here. This is the first ever Ascend Innovation Summit.
Yeah. We started Apex now going on 13 years ago. And maybe tie into my background. I started at least my financial career. I started my working life as an environmental scientist. Right? I had this environmental science degree. I had a mountain of debt, and I had to get a job. So it was like, hey, be a scientist. I quickly realized that was not my calling in life, and you didn't make any money. So I was sort of fortuitous. My roommate in college, dad, worked for a company called DLJ.
Sure.
So I'm rewinding the tape for the audience. Investment bank, New York City, didn't know anything about finance. And he said, hey, I can get you into this MBA program that we have here at DLJ. Okay, how much does it pay? was the question. So I took that job. And at the time, people remember DLJ. It was just this awesome firm, right? This amazing culture. And it owned this little firm in Jersey City, New Jersey, called Pershing. Right, which for those audience knows, it was sort of the OG, the original clearing firm in our industry.
Like I think 2/3 of the industry use Pershing.
Yeah,
right?
all of the old guard of our industry.
You also had the specialists down on the floor, right? And big specialist operation.
That's right. Yeah. So I was one of the runners down there, running around early in my career. So anyway, so you show. So I'm in DLJ. They do this rotation thing. And at the end, there was a little bit of like a beauty pageant. The partners selected, either you got thrown out because you weren't good enough for DLJ, or you got placed somewhere. So there's a guy named Dick Pector, one of the partners at the time. I don't know, somehow he saw something in the Paisan, I don't know. And he said, hey, you're going to go work at this. I'm in charge of a bunch of stuff, including this Pershing thing. Okay, what does that mean? Right? So, cool office, 277 Park. It's like amazing. And I get banished to Jersey City, New Jersey. No offense to people in Jersey City, but at the time, you're talking about the late 90s, not the greatest place, right, to be.
But think about this, and I know you know this, the learning, the education you got from Pershing and being down there and just understanding the nuts and bolts of the business, you would have never got if you were sitting around on Park Avenue.
Absolutely right.
So speak to that.
Yeah, look, so, I think we all have kids. I have a son who's 23. I tell all my kids, I have 4 kids. And I just say, and to the kids at Apex, say yes to everything.
Right.
Just say yes. Have grit. What else do you have to do except work? Like you're 23 years old. Okay, work. Right? Have grind. Right? You got to grind and say yes to everything. That's what I did. Right, as this young kid, and I appreciate the opportunities that Pershing afforded to me. They had amazing leadership at the time, and they gave me a bunch of opportunity to learn this business. I always talk about the back of the inchworm.
That's right.
Yeah, I was going to say the
bowels-
plumbing of the business,
the
because
bowels
I'll
of
tell
our
you,
industry.
as a trading assistant in the late 90s, I probably said thousands of times, give up Pershing. I mean, like, think about that. Like, as a trading assistant, you had to name your give up Pershing to your floor brokers and the like. So, so you learned the plumbing, and it sounds like that was a great foundation for your career over the next couple decades.
It was also, so there was a step in between here. I helped found a company called Convergence, and it actually connected in there. So DLJ gets acquired by Credit Suisse. Credit Suisse is like, what is this thing, Pershing? We don't really want that. So they sell Pershing to the Bank of New York. Okay. So in that transaction, and I'm doing a bunch of stuff in M&A at this point in my career, I get to know a guy named Joe Velli, and Joe is in the Bank of New York and says, hey, we're going to create this thing. Why don't you come help me create this thing called Convergex? And we're going to build algorithms and do trading for hedge funds and long onlys. So we peel out a bunch of assets from the Bank of New York. We buy this company called Escastle, put this thing together, and there's this company here in New York City. I'm one of the originals.
I don't want to jump to Apex yet, but I want to speak to you about culture and the importance of culture, because DLJ had all those firms,
Crazy.
DLJ, Drexel Burnham, Solomon Brothers, Goldman Sachs.
Yeah.
The importance of culture in the workplace.
Yeah. So it's funny, over your career, and I've just been fortunate to be around amazing people. Right? One of my all-time greats, Brian Shea, was the CEO of Pershing at the time. And if he's out there listening, I learned a lot of how I operate today from him, right? In terms of understand the details, right? I talked about grind before. It's like, don't do something that I'm not going to ask people that work at Apex to do something that I wouldn't do myself, right? And really understand actually what we're doing, right? This is, growth. We can get into where Apex is today, but hey, there's the right way and there's the wrong way in our business, right? Do things the right way. I would also say, without naming names, I also work for people that were not great. And honestly, say you learn more from your failures than from your successes. I'd say the same holds true for that comment, which is, hey, don't be a shithead.
No,
If I allowed to say
learn. You can learn something from everybody.
Yeah.
You can learn what to do and what not to do, which is equally, if not more important, than just understanding you don't want to be an asshole in life, because you've seen enough of them along the way.
So one of the things we talk about all the time, and I interview just about everyone at Apex that comes through the door.
How many employees you guys have?
Gosh, we're at about 1,100 employees now. Yeah, it's crazy. We started, it was nothing, right? So it's amazing. We'll get into this event. It's really amazing for me to be here. But anyway, I interview most people, and I would say the same thing, right? Which is, whatever job you're interviewing for, I'm assuming that there are people that are going to interview that whether or not you're good for this. You're technically proficient in the job we're asking you to do. I want to talk to you about who you are and make sure that you fit this organization, right? That you're, in our terms, great, right? That you are going to be somebody that actually is going to be part of this community. And you just said about assholes. I have literally say it. There are no assholes here.
Right.
Right. And you mentioned some of these firms. I won't name names. We've all been in this business a long time. There's a lot of sharp elbow firms in this world, in our world of finance. We're not one of them.
All right. So that gets back to culture. Now, it's that when you're small, it's easy to have the culture. As you start to grow, it starts to get more difficult. And you're at a point now, it's sort of that inflection point where culture is important.
Yeah.
But things, and I'm not suggesting it's going to happen with you, but things can fall between the cracks when you get a little bit bigger. Speak to that.
Yeah, look, and so it stresses me out. I used to prided myself. I'd walk around the halls every morning and say hello to everyone, every single person, and I knew everyone's name and roughly something about every person in the company, right? It's harder now, right? Let's talk about this conference. There's some people I'm like, do you work at Apex or your clients, right? So it's harder to do that. I think back to the part about being present and being in the trenches and making sure that drumbeat about, hey, the culture matters, really important to me, right? And so part of this is you got to hire the people around me, and they have to be great. They have to actually embody what we want out of the leadership in this firm. And then it goes down from there. And so back to that point of no a-holes, it's really important. And if there's somebody that starts to exhibit some sharp elbows, it doesn't matter how good they are. Doesn't matter how great they are at their job, like proficiency in that job, they're a great trader or whatever it is, they don't work here. And so one of the things that happens, say it's a little ruthless, is people don't last here very long if you don't show up with what we need. And by the way, we're not for everybody, right? And this is why the interview process is pretty tough here, is because put people through the ringers to say, like, are you sure you're ready to come to a firm like this? Because we are not for everybody. We do things differently. You got to show up and you're going to work your tail off in this company, but you're always going to do it in the right way.
So let's talk about Apex. What you guys do is mission critical, right? For hundreds of financial services firms. And, Guy and I, as we've been walking around, and we'll get to the event in a couple minutes. I mean, it's a who's who of financial services. They're all name branded. And there's some, I'm sure, that are up and coming, and they're going to be the next thing. So talk to us a little bit about where Apex sits in this ecosystem.
So we mentioned Pershing, for the audience that understands our world. We're the plumbing of retail investing, right? So we're purely B2B company. I wouldn't do anything B2C. And that platform manifests itself in what I would call modern custodian, right? I don't love that word because it sounds old in our industry. It sounds like clunky. I think the approach that we've taken, right, we'll get into kind of why the builders, the fintechs, the disruptors, our industry are by and large all on Apex, is we consider ourselves technologists, right? It starts, we're technologists that, oh, by the way, provide custody, right? That's the kind of the premise behind the company. And then the second part, and I said my opening this morning, the purpose of Apex, and I talk about this incessantly inside the company, is how do we help every person on this planet invest? And it's a drumbeat inside the company, which is, we're going to do it purely B2B, but how do we create this amazing platform that allows you to open an account, fund it, trade it, confirm statements, cost basis, tax reporting, settling trades, do that across TradFi to DeFi, do it for traditional advisors and bleeding edge fintechs. Is how do you create that chassis that's totally real-time cloud native? There is no one else on the planet that does what we do.
Well, custodian, if you think about it in the terminology, it's like a menial task, but in our world, it means something different. So what you're talking about is being a steward of something. And the importance of that, and how it's very hard to get there. It's very easy to lose it. So again, going back to the culture thing, just understanding that each day you have to sort of be there. So speak to the importance of that and what you've seen over your career in terms of the retail trader, the growth of the retail trader, it's probably as democratized as it's ever been.
Yeah, it's funny. I part of my speech this morning, we talked about what did the industry look like 15 years ago, just retail investing, right? And it's pretty incredible how much change has happened over 15 years. And then, when we talk about where it's going next, but 15 years ago, we remember you couldn't open an account with less than $1,000. It would take several days to open that account. A trade was $9.95 in and out. So you're paying $10 each time you bought and sold trade. It took 3 days to settle. Right. So today's Thursday. You weren't settling that transaction. You sold your stock. You didn't get your money until next Tuesday. This is sort of nuts, right? And so we took on really the purpose, go back to, hey, help every person on the planet invest, do it through B2B. And really the linchpin for the firm is how do you sort of maniacal focus on eliminating friction, right? So it's funny, I get annoyed and maybe proud, I don't know, it depends on the day. We talk about zero commission, right? And I hear Schwab gets credit and Robinhood gets credit for it. I mean, Robinhood was a partner of ours. The only reason Robinhood could offer zero commission was because of Apex, right, as a company. So yeah, it's fun for me because the team, back to your culture, they believe in it. This comes back to like people that fit or don't fit really quick. You can really quickly understand whether or not the 1,000 people in this company actually believe in what we're doing, that this platform we build, Ascend OS, as part of the conference, is and will be the cornerstone of our industry. Like fast forward 10 years, Apex will be the next Schwab.
Mm-hmm.
Not the B2C side and the Carl the broker stuff, but the B2B side of it. We're like really maniacally focused on that plumbing, and the industry needs and demands this to be better. You think about your own lives. Like I could pull out my phone and I could order something on Amazon and it would show up here at the hotel in a couple hours. Depends on what it is, but by and large, you can get pretty much anything you want. A Waymo will come up, we'll literally pull out, you guys have done it here in Austin, but the Waymos are driving around. You get in a car, it has no driver, it just drives you around. It's like amazing. And yet it still takes 24 hours to settle a trade in our industry. It's like, what are we doing? And so like, if you have that mindset about, hey, we're going to take out the friction, and then we're going to partner with the people all at the conference here and say, we're going to help you do something that's going to disrupt this industry in a positive way. Now at the core, one last thing I'd say is you're a custodian. Okay. So we're talking about all the cool things. You have to be safe, secure. You have to have a massive balance sheet. You have to, it's like breathing. Okay. Breathe in, you breathe out. You just expect there to be oxygen in the room, right? That's at the core of what we do. You have to have the capital. You got to follow the rules, right? There's a lot of Byzantine crazy rules, FINRA, SEC. You got to make sure you dot the I's across the T's, and that you breathe in, you breathe out. That your custodian is there every single day, doing the basics right. Then all the cool stuff comes on top of that.
Yeah, and I guess one of the takeaways, just being here the last day or so, is that you are a fintech. Like, so what Guy just said, a lot of folks have this idea of what a custody. When you were, back at Pershing at Bank of New York, it's not the sexiest bank on the street, right? And so I think that's where a lot of these sort of, thoughts about different businesses. But you're a fintech, you're driving innovation, and these are the sorts of things that your customers need, so they can basically serve their customers better, right? So, that all makes perfect sense to me. You had this amazing slide up during your keynote. You had 2010, and you just went through some of them, commission free and, clearing and all that sort of stuff. The one, and I'm not going to talk about Bitcoin at 27 cents. That got a roar, by the way, in the room to 102,000. To me, it was that retail ownership stat of the stock market. Speak to that, what's happened over the last 15 years, because that's something, the game has totally changed now.
Incredible, right? So think about, we've been at this a long time, right? It's driven by the institutions, big long onlys driving the stock market up or down. Fast forward to back 15 years ago, 30%, which actually was higher than I thought, but 30% quote unquote retail. And a lot of it was traditional retail, right? Sitting in a 401k or whatever it is. Fast forward to today, it's grown 10% more in those 15 years. Okay, 10%, you're like, think about our market. We're talking about a massive market. And today, roughly 40% of the market is driven by retail, a retail investor. And we watch it. You can see the market. So you guys are on it all day long. You see it. The movements in stock now, right? And then the connection to social media is just incredible. It's incredible. And by the way, I'm proud of that because we've lowered the barriers. We've allowed people to start to express their lives, financial lives, through their phones, right? And that's great for people. This was a rich person. Going back, remember I said, you couldn't open an account with less than $1,000, cost $10 every time you traded. It was a rigged system. It was for people that had money. Now you have young people that, they're in their college dorms and they're talking about stocks, the things that they believe in, and now they can actually buy and sell.
There's a term that I've never used, but it's been used often on all the different business channels, and that's smart money. When you hear that, does it make your blood curdle the way it makes mine? Because, in today's world, I would submit that the retail money might actually be the smartest money out there. Speak to that.
Yeah, we've seen it in the data. Okay, so I have about 300 clients. Remember, we're purely B2B, and we support about 23 million retail investors today. Okay. And this time next year, it'll be more than double that. Okay. So it's amazing for me to think like, okay, 1 out of every 5 or 6 Americans, if we just take the American population, although 25% is outside the US, but nonetheless, it's a massive amount of people. And what we watched, right? So let's go back to April, all the upheaval. What we watched is people actually doubling down into the market. Retail investors, They're not running. Like all this, I watch them CNBC. It's like, dumb retail investors, they sell when everyone else, smart money's buying, to your point. That is not actually happening. Now, is there some of it? Of course there's some of it. But first of all, the access is much better. Okay, great. So people can actually take out their phone and express themselves. And then the advice they're getting isn't staring at CNBC. Like, I go back to, I'm showing my age here. My dad would sit there and pull out the newspaper and we'd look at tickers and we'd just talk about stocks when I was a kid. Now you have influencers on TikTok or Instagram, smart people that are talking about the markets and are helping these young people actually make decisions that are super smart. So it's not anymore where, hey, I grow up, I get real money and I have to write a check and I hand it to some advisor. Now the world's changing, right? That dynamic of where, hey, I finally made some real money. Let me introduce you to my dad's advisor. That is going to break. It's going to break. And there's no doubt about it because there's tools now. First of all, young people, look, I say young people, I sound like an old man here. I don't want to talk to anybody. I'm a busy guy. I want to be on my phone. I know what I'm doing, right? And when I need somebody for advice, let them be there, right? That'll be somebody I trust, right? So I have some relationship, but make it what I call episodic advice, which is, turn it into something that's by and large going to be automated. But when I need somebody, right, let them be there for me. Right.
So it's interesting. I go back, my dad was like really into Peter Lynch, right? Back in the day. And so obviously a legendary Fidelity portfolio manager, but he used to say, buy what you know. And I think that's a lot of the retail sort of, strategy right now. I mean, think about all these massive tech stocks. Well, they know all these companies, they know their products, right? And then they get, interested in the folks who run them. And then they create a community with other people who are investing on them. That's where the social media stuff comes out. And I guess this is a good segue right now, because I know you have a panel later that I want to go check out, is TradFi, guy that's traditional finance.
Yes, no, I'm familiar with this.
I want to be sure.
Although again, I would say
Are you saying that's because he's
finance.
Italian or?
A lot of different reasons.
I guess, by the way, because he's a legend. Okay. But I'm gonna call up an Uber later today and I'm gonna tell him it's an Uber and I'm gonna push him in and it's gonna be a Waymo. Because I love the Waymo. Every time I'm in California, I'm always doing it. So I'm gonna do it here. But TradFi and DeFi. So I'm sure you guys are driving, again, a lot of the innovation, because a lot of your customers, they're not going to kind of they know there's demand for it, right? But for them to actually create it is probably, a tough road to hoe. So talk to us about that transition and maybe give us a sense of where you see it going over the next few years.
So, it's amazing to me. The up is down, down is up, in that the regulatory climate around DeFi went from lockdown and a bad word to, now we're in a position where everything is on the table and we're up and to the right on the DeFi side, right? Which I think it really is insane for me being an operator, how much change simply because we had a change in DC. Really, that's really driven a lot of it. And, speak my mind, I always do. I would say that the former leadership down in the SEC, I think was incredibly adversarial for our industry. And I've been at this a really long time. I don't think in my career, I know in my career, it never felt more adversarial versus the SEC than it did under Gensler's regime. Right,
and that was that's a guy who actually understood, crypto and blockchain in general. What
I'd say is smart guy who understood the risks. Right, let's remember the FTX, which is like yesterday's news. I don't really talk about Sam anymore. That was scary stuff. If you're in this business, I talk about safety, security, what we do. You got to make sure that you breathe in, breathe out, and like stuff actually works. The horses were out of the barn back then. And some bad stuff happened. A lot of people lost money, right? And so what I am hopeful for in this kind of new regime is that they're thoughtful about it, they're connecting the dots, and that we're going to do it in a safe, secure way, right? So yes, the original question is TradFi, DeFi. They are converging, and I use more of the word colliding in a lot of ways before our eyes, right? And so you think about, what does that mean? Really think about it kind of in roughly three ways, right? Retail investor, and I think through the lens of retail investor. I want to buy Tesla. Okay. I want it to be in my account. I want to buy Bitcoin. I want it to be in my account. Why do we have these two crazy worlds? Why can't I use the money here? They're investable assets. Think about investable assets. Okay. So there's work to bring those two together to make it much more simple for a retail investor to connect the dots, right? One, stablecoin. Second big pillar, which is the funding rails. And I think of it through the lens of how do you get money in, like think on-ramps and off-ramps into our world that we know, TradFi. Stablecoin is a real path, especially for people outside the US, which, pay attention, is growing massively. People that are outside that want to invest in the US. Those people, we take for granted that we have this banking system. US doesn't work the same way in a lot of places around the world. Stablecoins is a way to get money in and out. And then for people in the US, it's a cheaper, faster path, right? And so for me, it leaned hard into on-ramps, off-ramps. And then the third pillar, which is a little squinty right now, but coming, is how do you tokenize the security, right? And the good news is there's rules and regulations that really kind of make that very difficult to happen today, which I think is actually a good thing, right? Because think about the utility of this, right? Our system is pretty good for a retail investor today. But this notion of taking Tesla stock, you buy it and creating a tokenized form of it and be able to now settle real time on blockchain, similar to, I don't know if you guys buy or sell, crypto, but there's parallels there between our world, TradFi and DeFi, and there's a lot of benefits to this notion of an immutable contract on chain. So I would predict, I'll tell you that I think what's going to end up happening is our world's going to split in some ways, where retail is going to follow this bleeding edge path, and the traditional side, the long onlys that are settling big blocks of stock that have old COBOL code and IBM mainframes, that stuff is going to continue down this traditional route, and I think you're going to see a lot of change more on the retail track.
All right, before we get out of here and let you go back to the conference, you're probably as excited about what's going on, I would submit, just hearing you and seeing you, as you've been in your career. So talk about that and talk about the conference.
Yeah, you nailed it. It's so much fun to be in this world. We're at the bottom, I think, of another big step, which is the stuff coming next. It's democratization of alternatives, private securities. We didn't really touch on, but there's a lot to happen there. The DeFi side, right? What's happening there? How do you take people from outside the world, right? Think 2%, 3% of people in India have an investment account. Like, there's a lot of opportunity, and this is the greatest market in the world, right? So how do you start to shrink the world and provide access? I said literally right before I got on stage this morning, we were playing that hype video or whatever in the beginning.
White Stripes guy. That's why I asked. I came in here and I said, "What would your walk-up song?"
The White Stripes.
He says, he goes, "I wouldn't have a walk-up song." Seven Nation Army.
It was about standing back there, and there's, I don't know, some guy, one of the tech guys, and he was the only guy with me. Right? He's like, "Okay, I got to usher you up on stage," and the word I had was grateful. Right. I'm just grateful. Right. I'm a lucky guy. Right. Yeah. I work really, really hard. And I'm proud of everything, but I'm also incredibly grateful for the opportunity to do this. So the community upstairs, I don't know, there's 100 and some odd firms here, and you guys get to hang out, hopefully the next couple of days. I don't know, family is a little bit over the top, but it's a community. Like we give a shit about each other. And I think it's this kind of perfect peanut butter and jelly, which is, hey, Apex got to do our part. We got to do all the back of the inchworm plumbing crap and do that really well, and then enable you to create this amazing client experience on top of us. Like, that's peanut butter and jelly, right? That's pretty cool.
He's more of a fluffernutter guy.
No, I've never. No. Really? I just want to be crystal effing clear.
Okay.
No,
he just went from here to here. Fluffernutter.
No,
this is what we do all day long. Just stick around, Bill. It gets better. But I walked in here before we did our other podcast. I was like, dun, dun, dun.
There we go.
Dun, dun. It's in my head.
There we go.
Listen, we're honored to be here.
Yeah.
Get to know your team. Obviously, get to know you. You and I met in New York. prior, but it's really fun for us. I mean, Guy would tell you he's been doing Fast Money 19 years.
If we get to January.
Yeah, and I've been doing it sitting next to Guy since 2012, doing the show, and we've gotten to meet hundreds, if not thousands, of retail investors.
Yeah.
And the stuff that you're speaking to as kind of the backbone that's allowing them to do things seamlessly. And, you know, on the other side of that is us getting to know these folks and looking at their passion and how they work towards this stuff. It's, you know, we push those together, we meet in the middle, and I think we're both really grateful, if that makes some sense. So we're grateful to be here, Bill. We really appreciate it. And we hope to see you back in New York sometime really soon.
Good to see you guys.
Thanks
for being here.